There we go. I think we're live, mate. I think we're live.
We're now live. Fantastic.
Okay.
The two mics.
Here we are today. Top tips for getting your mortgage approved with myself and your good self, Mike Roberts. At the moment, it is just me and you.
No problem. That's all right.
Can you see that in the top corner? Can you see the number of people that are live with us? Or
no problem. We can entertain each other.
Sounds good to me. So it might be another one of those things where nobody turns up and we just talk to each other for half an hour.
No problem. That's all right. We can teach each other.
So in terms of, we don't really want to dive into top tips. We want to see if anybody's actually going to come and join us first of all. But if there is anybody that is joining us, then I think you need to pop your name into the StreamYard comments so we can see any comments that you've got coming through. But just really opening up, really, and I don't think I've ever asked you this question, in terms of your background and how you got into mortgages and why you do what you do.
Good question. Yeah, good question. I probably don't look old enough, but I arranged my first mortgage in 1993, which just seems quite ridiculously incredible that it was that long ago. But actually, the reason I joined the mortgage team at NatWest is I was working on another department, just opening people's bank accounts and chasing up standing orders and stuff like that. But I was opposite the mortgage team, and they looked like they were having a great time with long lunches, company cars. You know, it seemed like they were earning loads of money, and I thought I want a bit of that. And I was only 22 at the time, I think. And the boss man there said, who's actually a client of mine now, the boss man said, look, go away and do your exams and come back when you're ready. He probably thought I was going to take about 2 years to do it, but I came back in 2 months having passed my mortgage entrance exam. And he was like, oh shit, I better give you a job then, hadn't I? So I started doing mortgages in 1993 at NatWest. Incredibly.
Wow. So
what about yourself?
Yeah, so for me, I worked for Legal & General for a number of years, probably the best part of 10 years, and was in sales, service, and looking after an account for Southern England, training mortgage advisors how to sell protection, funnily enough. And a good friend of mine at the time just said, look, why don't you come and become a mortgage advisor? And so he ran his own business. And so, you know, from leaving school, being in an employed role, sitting down with him and then sort of saying, okay, so how does it all work then? How does this whole world of being a mortgage advisor work?
Yeah.
He sat down and just took me through it. And, you know, the rest they say is history. But that was the launch pad 6 weeks before the credit crunch struck. So,
oh wow.
In terms of timing, I guess you could look at it one of two ways. Either it was the worst timing ever because I've gone from, you know, a pretty well-paid job with all the benefits, all that lovely stuff and holiday and everything else, through to sort of next to nothing and a real baptism of fire.
Yeah.
But I think for me, it helped shape me and it helped drive me in terms of doing what I do now.
Yeah.
So that was back in, just before the credit crunch struck. So here we are now, sort of 10, 12 years on, and, you know, still doing the same sort of thing, but in a much bigger way, rather than it just being me, you know, like yourself, got a team that work with us. So,
it's amazing how these things change, but it's almost incredible how they all stay the same as well in terms of, you know, how they look at your salary, look at your bank statements, look at your outgoings. You know, that doesn't change a great deal, really. They try and automate it. But back in my early days at NatWest, it was quite a straightforward job, really, because, you know, 90% of the clients we were dealing with were NatWest clients. So we could see their bank account, we could see their outgoings, we could see their income. So we didn't actually have to ask them for a great deal of paperwork because you know, we knew it all anyway. And that obviously that was before the days of credit files and credit checks and that sort of thing. You know, if the bank had done the loan, you know, they knew that they had a loan, sort of thing. So things were quite simple then, but I still think, you know, they're still asking for sort of similar things in terms of prove your pay slips, prove your bonuses, those sort of things. But I'm probably showing my age a bit here now.
Yeah. So in the last, I won't keep coming back to it. I won't say in the last 28 years, but in the last X number of years, what do you think have been the main changes between assessing people's income sort of back then and assessing people's income now? What have you seen as the big changes in that time?
Well, obviously the way people are paid has changed a great deal. I would say back then, it was more, here's a salary and you're in the same job for a good length of time, and you didn't change jobs very, very frequently. But these days, the employment market is a lot more fluid. People change jobs a lot more. And the way people are paid, in terms of commission and bonuses and all those other things, that's a lot more common than what I remember it being all those years ago. So, especially if you're having a low basic and you earn lots of money on commission and bonuses, that has changed a great deal. And lenders are getting a lot more flexible on that now. Maybe not so much since COVID. They're obviously worried about people's ability to continue earning bonuses and commission, but prior to that, we have lenders that, as that were averaged the previous 3 months' income. Bonuses and commission and that sort of thing. They would purely look at the previous 3 months, which is quite generous and quite flexible. But obviously, the lenders were confident that that was the nature of people's pay and were prepared to use it. So that's probably been the biggest difference is their flexibility in terms of using commission, using bonuses, that sort of thing. And the other one is contracting. I don't remember contracting being a massive thing 28 years ago, but it's a significant part of the market now. So contracting, I deal with a lot of guys that work in the construction industry, earn good money, £400, £500, £600 a day in the construction industry, and lenders are prepared to use that contract. So although they might get paid under the CIS scheme or get paid to their limited company, lenders are prepared to use the day rate because, they know that it's pretty consistent. Lots of those jobs are quite secure. So even the very nature of contracting is it's temporary, but I tend to see that they're in with the same firm for a reasonable length of time, and that means it gives the lenders the comfort to use the day rate.
Yeah.
Even now in where it's a bit uncertain, if they've been able to keep working through COVID, which a lot of the construction industry have been able to, using the day rate is still open to quite a few clients.
Absolutely. So in terms of getting mortgages approved, because you and I, we talk quite a lot in terms of the mortgage market and what's going on and what's happening. What would be your top tips in terms of getting your mortgage approved? What's your number one thing right up there that just helps clients get their mortgages approved?
I would say all around the credit file. I think that's been the case for a long time. Is your credit file a true reflection of your financial position? And it still amazes me that even brokers will go ahead and make mortgage applications without checking a credit file, because I've been doing it 28 years, and you still will get things wrong if you haven't checked a credit file or asked for a credit file. And don't get me wrong, sometimes there's time pressures. Sometimes you feel that it looks like quite a clean case, so you might sort of give it a go, but there's always something crops up. More often than not, in more than half of cases, there's something where the client understand that the credit card balance, they'd repaid it, but it was still showing as outstanding on their credit file. Are you on the voters roll? Is the address history matching up? And like I say, the balance is the big one. They think it should show as a nil balance, but it's still showing on the credit file as a balance. I had one client who didn't tell me about her Santander loan because we were applying to Santander, and she said, well, they should have known about it. Well, that's not how it works. You're sort of presenting the current position, and okay, it's Santander and you had a Santander loan, but if you're not declaring it, they're going to wonder why you're not declaring it. So So to me, you're doing yourself a disservice, or your broker's doing yourself a disservice if you're not getting a credit file. I think, it's got to be presented in the same way. The balances have got to match. There's always queries if the balance doesn't match. And there's always this, oh, I forgot the store card, or I didn't realize my wife had a store card, or husband had a store card, or whatever. And there's always these little things that are only going to add to the delay. So even if it didn't really matter to the overall assessment, it will affect and cause delays.
Yeah, I mean, it's the footprint now for everything, isn't it? The credit file, and it just tells the story, and also, lenders aren't daft; they've got access to most of that information already. So it's our job as professional advisors to verify and validate, to make sure that everything that's going down on that application is a true reflection. And it's normally a DFS sofa that's normally forgotten about, and which just comes up time and time again.
Yeah, DFS sofas, or store cards, or a colleague of mine had one yesterday where the guy had paid his golf club fees on premium credit, but obviously that is still a credit agreement, so didn't think to declare that. So I think, why not get the credit file? You've got nothing to lose. It doesn't cost much. You can sometimes get it for free. Sometimes your broker can obtain it, and it just makes, improves your chances of getting it approved first time. That's the key thing. You don't really want to be applying to 3-4 different lenders, just because you haven't done the background research that you really need to be doing.
Yeah, absolutely. So credit report is crucial. What other
it will pick up things, pick up things like, missed payments. Okay, you might have a 999 credit score, but a lender will still want to look at missed payments, even if they were 4 or 5 years ago. Direct debits are easy to get cancelled or get missed a month late. So it just gives you the full picture, and you really do need the full picture at the moment, because lenders are looking at absolutely everything.
Yeah, and quite rightly so. And what other top tips have you got that you impart to your clients that helps with getting their mortgage approved?
Well, obviously, let's have a good look at the credit file. Let's see if we can sort of correct things that are wrong. I did have one where he bought a new car, and the new car loan and the previous car loan was showing. But apart from that, it's documentation. So to get the documentation right, I deal with a lot of self-employed people, and there's so many different ways you can present a self-employed case, whether it's salary and dividends, share of profit, contractor income. So I get the paperwork that covers all of those scenarios. So rather than going down one path like salary and dividends, I want to understand the business. I want to understand if they're contracting. I want all of the information, so that I've got more than one path to follow, because quite frequently I can get the client more using the profits of the business rather than the profits that they're taking in the form of dividends.
That's an interesting one. I think that in terms of top tips, I mean, so basically your role, my role as professional advisors is about assimilating all of that information up front, isn't it? It's whether it's, like you say, whether it's salary, bonus, overtime. If you're self-employed, your legal entity status, so sole trade or limited, and then, like you say, whether it's salary and net profits, and whether that's salary and dividends, or salary and share of net profit, and the difference can be astonishing.
Yeah, absolutely. And even things like, did you take out dividends that exceeded last year's profits and all stuff like that? If I'm fully informed, then I can push back to the lenders and challenge the lender's decision if I've got all that information. So, like I say, okay, a lot of lenders use salary and dividends, but there's also lots of lenders that will look at the profits of the company. So, it's quite expensive to take profits out of the company as dividends now. So if you're leaving profits in the business, it's not really a true reflection of your earnings, because if you made a 200 profit and only took 50 grand salary, then your earnings really are the 200,000. You've just chosen not to take them out. So I work closely with a couple of accountants, and I just say, look, send me everything. Send me the accounts, send me the tax overview, send me the tax calculations. Accountants sometimes have bank statements. I just would rather have everything, because then I know that I've got the full picture and can get the client the best mortgage.
Absolutely. So, and what other things are working for you in terms of getting those mortgages over the line? Because I mean, let's be honest, that the pushback from lenders and the due diligence at the moment is probably the most I've seen it for a number of years now, and quite rightly so, because they've got to balance that element of risk with responsible lending, and there is a lot more work that goes into getting a mortgage across than I've seen for a number of years. So is there anything else that you do with your clients to get it through the process as quickly as you can?
Yeah, similar to what we've been saying, it's preparation these days. I think if you're applying for a mortgage and wondering what the lender may ask for, and then getting the documentation at that point, you're wasting time. You're increasing the chances of the case being cancelled, you're increasing the chances of the case being declined. But like bank statements are one of the biggest delays in my view. File preparation 100%. I want all the bank statements. I want your sole account, your joint account, your business account, your savings account. Again, it's all about me understanding the fuller picture, because more often than not, the lender's going to ask questions about it. So just because they don't ask for proof of the deposit at the initial stage, they're probably going to ask for it later, or the solicitor might need something. So it's all about just send me everything. We've now got secure portals. It doesn't have to be emailed. There's no danger to your data going astray. We've got secure portals. Just give me absolutely everything, because then I can take the time, complete my own due diligence, using my many years of experience. You sort of know what lenders are going to look for and what problems may come up. Just on bank statements, like a regular payment to a friend or a parent, or that looks like a loan or something like that. It's just sort of hitting the problems before they become a problem, if you like.
Absolutely. So it's basically front loading the application with everything you think you need. And also, with the time delays now with lenders turning applications around, if you've then got to go back to the client for something, and then you've got another 4 or 5 day delay before the lender looks at it again, you've lost a week in the process. And that's, I guess in the buying chain at the moment, a week is a very, very long time.
It is, especially with stamp duty deadlines. Okay, it's been extended, but you can't afford those delays, because say the lender's not going to instruct the valuation until they've approved it. If you're waiting 2, 3, 4 weeks to get approval, the estate agent and the current owner is going to be wondering what's going on. Why isn't the valuation being done? So you're going to start to jeopardize the chain if you're not prepared.
Yeah. And what do you think sort of future of not really the future of mortgages, because they're always going to have the mortgages, are going to need the mortgages with home ownership in the UK, but more in terms of what happen, what do we think is going to happen next? We've got the 5% scheme coming up, of which there are very, very few details at the moment. But
it was a great announcement, but as per usual, they're a bit light on the detail. But I can see that they want to keep the market stimulated. They want to keep first-time buyers in with a shout of getting a property. So 95% mortgages are only going to help that. Obviously, the interest rates might be on the higher side, but you still need to do the calculation as to whether buying is better than renting, and it normally is better than renting. So you just got to be prepared that the interest rates might be a bit higher, but I think 95% mortgages are a good thing personally.
Yeah, I saw something yesterday that they think, I can't remember which lender it was, but it was muted that the rate would be sort of 4.4% thereabouts, and I don't know, because it's not been published yet. But even when you work that out with like the generation rent that we've got at the moment, it's like you say, the cost of actually buying somewhere is still cheaper than potentially renting.
Yeah.
So, and then obviously the 5%.
Rates of 4% don't scare me when I remember arranging fixed rates of 8.5%. Obviously, again, I'm showing my age, but I think, it should only be a short-term thing. If you take a two-year rate, and in 2 years' time, hopefully your property price has gone up, or you've chipped away at the mortgage and you're then at 90% or 85%, you might be able to refinance and get better rates at that point.
Yeah, I think the skill of the advisors, I think, with the 5% deal, because it's going to be all too easy to push it out to a 35 or a 40-year term. And I've got some reasonable concerns around that, in terms that if property prices do drop a little bit, that you're never going to get, or you're not going to get to the 90% or 85% loan to value thresholds particularly quickly.
Yeah, I agree.
And actually, I think our job as professional advisors is really, how do we get a client from a 95% loan to value to sort of 85%, and that almost like safer place with loan to value as quickly as possible.
Yeah, I agree.
And
I think, I think 95% mortgages is not a bad thing, but it makes what we've been discussing even more important, because they are still going to be quite strict on how they assess the client. Okay, the government's providing the lender with a bit of a safety net under the guarantee scheme. But like I say, I think you need, all the things we discussed. Get your credit file looked at, get it in, make sure it's in good order, make sure it matches what's truly happened in the past. Get your bank statements ready, get all of your bank statements ready, get all of your proof of income up to date. And if you're relying on bonuses and commission, prove a good history of that. Proof of deposit and all those other things. Just get prepared way before you're even starting to look at houses. That's the other thing that I really work tirelessly with my clients on is, okay, you're thinking of going on the market. Now is the time to get prepared. Whether it's 1 month, 2 months, 3 months, 6 months down the line, let's start this process now to give you every best possible chance to, get the right house and get the right mortgage.
Does your heart sink like mine does when somebody phones up and says, "I've had an offer accepted, I now need to sort the mortgage"? Oh my goodness, please don't.
Yeah.
Unfortunately, in some cases that really works out, and that's all fine. But it's I just don't.
Too late. Well, it's not too late, but you're chasing your tail a bit, because you've already committed to buying something.
Yeah, it's get the foundations in place, get the agreement in principle, know the affordability is good, know that all the documentation is there, that the credit, like the point you made about the credit file's there and it's all fine and it's all good to go. And then when you get the offer accepted, that's almost, apart from the formal application, which is quite significant, but that's almost the main part of getting a mortgage application submitted and approved, isn't it? It's just all that groundwork prior to the offer being accepted is the fundamentals of it all.
I do actually charge now for arranging the agreement in principle, because I believe that is the most important part of the process. And I know that there's some brokers that will disagree with me about the need to get an agreement in principle, but even with 28 years experience, I can't second guess what a lender's going to come back with.
No.
The income might be perfect. The credit file might be perfect, but there's still sort of some other background checks that they do that you're not necessarily aware of. There's lots of things they look at. They talk to HMRC, just second check the income. Maybe not so much at agreement in principle stage, but like I say, I'm more comfortable if I've got an agreement in principle. Even with all of my experience, I believe it's a fundamental part of the whole process, especially if you're going to try and buy a property. And there's other people relying on you to be able to get your finances in order. So I wouldn't be allowing my clients to go off and offer on property until I've been through this whole process.
No, completely, and same here. I just think it's just not worth the the risk of losing out on their property.
Yeah.
And for what? Just for an extra hour of upfront sort of communication and just information to get it all right and get it submitted. And you can't second guess these things now. You know, and probably very similar to you. We've had one this week, submitted it through, and it goes through absolutely fine. And you've got others where you go, well, I'm not really expecting this to go through, and it does. And everything in between, isn't it? So it's an interesting market. It's an interesting
like
market.
I say, we, you know, me as a person, or even Penny Matters as a company, you know, we do a significant amount of mortgage business. We're all very experienced, but like I say, I just don't understand how a broker can sort of guess what the decision is going to come back like. You know, so it's quite often you're trying more than one lender, but even if it's the cleanest case you've ever seen, I still want the comfort factor of knowing that those additional checks are being done, and then you've got a piece of paper to show the estate agent to say, look, you know, I'm in a great position here.
Yeah.
You know, I would encourage it.
So just to recap, because we're sort of heading up to our 30 minutes of mortgage talk this afternoon. So credit report is absolutely crucial, the footprint of everything, verifying the income, whether it's employed, pay slips, contracts, P60s, self-employed with accounts, tax computations, tax year overviews, bank statements, affordability and expenditure, and basically making sure we've got everything lined up before we sort of get that application in, which really we're packaging it up. And I know you work similar to ourselves, and just fully packaging that case. So when you submit to lender, you're giving the client and yourselves the best chances of success first time.
Yeah. No, totally agree. Yeah, totally agree. Just something else I've got on my list is, you know, they're sort of legal matters to consider. You know, like if you've changed your name, or you've got married. You know, if you've got married, you know, check your passport, your driving license, your marriage certificate. You know, if you've ever changed your name for depot or whatever, you know, get all of those documents together. I do often quite find that, especially when you're remortgaging, is, you know, what's on land registry. You know, what name did the solicitor use last time? Was it your maiden name or your married name, or hyphenated name, or middle name was missed out? You know, all those things can add to delays. So I often do a land registry check, especially if it's a leasehold property. If it's a leasehold property, it's worth having a look at, you know, what's on the land registry for the leaseholder, the freeholder, and how long's left on the lease. So again, all these other things just will help smooth the process and increase your chance of getting the right mortgage or the right property.
Absolutely, you're absolutely. The title register, we do the same. So we pay to get the title register, but at least on a leasehold property, we've got all the details. So you're not waiting for the estate agent to come back to you 2 days later with the remaining lease and such like that. It makes perfect sense. This has been good. Sort of just some top tips there on sort of getting the mortgage approved. And
just as a sort of caveat to keep my compliance department happy, obviously this is just sort of for guidance purposes. If you want specific bespoke advice, then, you know, talk to us or talk to a professional that can.
Yeah, absolutely. Yeah, that's a good footnote. So yeah, anything we've discussed today doesn't relate to any specific case or any specific individual, and yeah, it's purely information purposes only. And like yourself, you know, full recommendation is only given once you've done a full in-depth appointment and fact find with a client, and satisfied yourself that you're able to make that recommendation, isn't it? So anyway, great to see you. Always good to catch up. And yeah, I think we need to do another live, and we'll pick another topic to go live with, and wow the world with the exciting world of mortgages.
Like you say, the two Mikes, not as funny as the two Ronnies.
Well, debatable, but yeah.
It's good night from him.
Yeah, and good night from me. Cheers, Mike.
See ya.
See you later.